Before you buy a single share of SpaceX, you need to hear this. Because when one of the most anticipated companies in history finally goes public, millions of investors are likely to make the exact same mistake. A mistake that has destroyed more wealth than market crashes, more than inflation, and in some cases, more than bad companies themselves. What's shocking is that this mistake doesn't happen because investors are careless. It happens because they're excited. And that's exactly why it's so dangerous. Right now, people are already talking about SpaceX as if it's guaranteed to make investors rich. After all, this is the company that revolutionized rockets, built a global satellite network, and turned science fiction into reality. But here's what almost nobody is talking about. The greatest company in the world can still be a terrible investment if you buy it at the wrong price. And history has already shown us exactly how this story can play out. Stay with me, because by the end of this video, you'll understand the one thing that matters more than SpaceX itself, and it could save you from a very expensive mistake. The SpaceX dream. Let's start with the obvious. SpaceX isn't a normal company. It's become something bigger. For many people, SpaceX represents the future of technology, the future of communication, the future of transportation, maybe even the future of humanity itself. Every successful rocket launch, every Starlink expansion, every ambitious announcement has only increased the excitement. And that's created something very powerful. Expectation. People aren't just investing in what SpaceX is today. They're investing in what they believe SpaceX could become. And that's where things get interesting. Because markets don't reward dreams. Markets reward reality. And sometimes the gap between those two things becomes very expensive. The lesson nobody talks about. Imagine two investors. Let's call them Alex and James. Both love the same company. Both believe in its future. Both are intelligent. Both invest. Yet one becomes wealthy. The other loses money. How is that possible? Simple. Price. That's it. One bought at a reasonable valuation. The other bought during peak excitement. Same company. Different outcome. And this happens over and over again throughout market history. The company wasn't the problem. The timing was. Remember that. Because it may become extremely important when SpaceX eventually reaches public markets. The IPO trap. Here's something most new investors don't understand. The moment everybody wants to buy something, that's often when risk starts increasing. Think about it. If everyone already believes a company will dominate the future, how much of that future success is already reflected in the price? That's the question professional investors ask. Retail investors often ask, how high can it go? Professionals ask, how much optimism is already priced in? Massive difference. And that difference separates investors from speculators. But the next part is where things become really dangerous. Why IPOs create bad decisions. Human beings are emotional creatures. We hate being left behind. It's built into our psychology. When everyone around us seems excited, we naturally become excited too. When everyone appears to be making money, we feel pressure to act. And financial markets know this. That's why major IPOs often create a feeding frenzy. News channels cover them nonstop. Social media becomes obsessed. Experts make bold predictions. And investors start imagining life-changing gains. But emotion has a strange effect. It makes risk feel invisible. For a brief moment, people stop asking critical questions and start chasing possibilities. That's exactly when mistakes happen. What history reveals. Now here's the part most investors ignore. History is full of incredible companies. Companies that changed industries. Companies that transformed the world. Companies that ultimately succeeded. Yet many early investors still lost money. Not because the companies failed, because expectations became unrealistic. That's a completely different risk. And it's one that doesn't get enough attention. When excitement becomes extreme, prices can rise far beyond what even great business performance can justify. Eventually, reality catches up. And when it does, investors who bought purely on excitement often learn a painful lesson. A great company is not automatically a great investment. The SpaceX question that matters. So let's ask the question almost nobody is asking. Not, will SpaceX be successful? Not, will SpaceX innovate? Not, will SpaceX grow? Those are important, but they're not the most important. The real question is, what valuation would make SpaceX a smart investment? Because valuation determines future returns. If expectations are already sky high, future gains become harder. If expectations are reasonable, opportunities become greater. This is where discipline matters. Because when emotions take over, valuation is often the first thing investors forget. What smart money will be watching? While retail investors focus on headlines, professional investors focus on numbers. They'll be studying revenue growth, profitability, cash flow, debt, competitive advantages, long-term sustainability. Not because these topics are exciting, because they're essential. Successful investing isn't about predicting headlines. It's about understanding businesses. And when excitement reaches extreme levels, that understanding becomes more valuable than ever. The danger of FOMO. Let's talk about the real enemy. Fear of missing out. FOMO. It's responsible for some of the worst investing decisions ever made. Because FOMO doesn't feel irrational. It feels urgent. It whispers, everyone else is buying. It might never be this cheap again. What if this is your chance? And suddenly, investors stop evaluating. They start reacting. That's when discipline disappears. And when discipline disappears, mistakes usually follow. What Warren Buffett understands. One principle has survived every market cycle, every bubble, every crash, every boom. And it's surprisingly simple. Price matters. Buffett has built an entire investing philosophy around this idea. Not buying what everyone loves. Not chasing trends. Not following crowds. But buying value. And that's a lesson every future SpaceX investor should remember. Because excitement can push prices higher, but value creates long-term returns. There's a huge difference. The scenario most people aren't prepared for. Imagine SpaceX announces its IPO tomorrow. The headlines explode. Social media goes crazy. Analysts compete to make the boldest predictions. Investors rush in. Demand surges. Excitement reaches levels nobody expected. Now ask yourself this. What if the stock doesn't immediately soar forever? What if expectations become too high? What if growth remains impressive, but not impressive enough to justify extreme optimism? That's a scenario many investors never consider. Yet history suggests it's one of the most important possibilities. The real opportunity. Ironically, the biggest opportunity may not come on IPO day. It may come later, after the excitement cools, after emotional buying fades, after the headlines move on. That's often when rational decisions become easier. When the crowd leaves, patience begins to pay. And patience has always been one of the greatest advantages an investor can have. SpaceX may become one of the most important companies of the 21st century. It may reshape industries, transform technology, and create extraordinary value. But none of that automatically guarantees extraordinary investment returns. Because investing is not about finding great companies. It's about finding great companies at sensible prices. And that's the mistake millions of investors forget. So when the day finally comes, when the IPO headlines appear, when everyone around you starts talking about SpaceX, take a breath, slow down, ignore the noise, and ask yourself one question. Am I investing because I've done the research, or because I'm afraid of missing out? Because the answer to that question could determine whether the SpaceX IPO becomes one of your smartest decisions, or one of your most expensive lessons. And in investing, the opportunities you avoid can be just as important as the ones you take. If you enjoyed this video, subscribe for more investing insights, and I'll see you in the next one.